All right, what is going on, everybody? This is going to be a little bit of a lengthier video, maybe pushing that 10-minute mark, but I'm going to go over all of the trades that I had today on the NASDAQ, the S&P, and the Aussie dollar. I'm going to go over my thought process on why I took those trades, why and how I managed those trades. I'm also going to go over signals that I got that I ignored and why, and just kind of talk about basic market structure and jump right in. So right now we're looking at the Australian dollar futures here. If you saw my short, today was a profitable day, $133, but I took several losers, so many break-even trades, but I was ebbing and flowing, and that's the name of the game. You just got to put on your trade and let it play out. So, jumping right in here, this is Aussie dollars. As you can see, overnight price action was just kind of sort of consolidating in this range. You had a top range from about 165 down to 995, and then a mid-range to bottom range from 995 down to 875. Now, breaking that up into two different zones, you kind of get to look at the market and really break it down into tradable areas. So that's what I was trying to say. So markets actually opened around here 9:30. So we actually broke down and made a new low. So you can kind of see that this futures currency is making its own ranges with about the same width this day. That's a 25-point width. That's a 24-point width. And then from this width to this width is 30-point width. So they're relatively equal in size. So taking that into account, that's kind of why they make nice channels that you can just fade off of all day long. So jumping into this signal here, markets in pre-market wanted to take a short signal, but we know that if you're gonna take a short trade, the best spot to take that short trade would actually be the overnight lows, because like I just said, if you're paying attention here, sorry, not paying attention here, if you're looking here at this box I just put in here, you can see that markets came down once, twice, three, four, five, six, seven, and then you kind of had a breakdown there finally. So this would actually be your short location. Short location one, and then short location two would be the mid of the box, right? And then short location three would be the top of the box. So as you can see here, we actually took the long signal, breaking back into that support resistance structure, kind of knocking this out as being a fake breakdown. That's kind of what happened. I was targeting the top range here. I wanted to see it kind of ebb and flow up and kind of make that nice little pattern that we all look for, the perfect little market structure bullshit like that. But that did not happen. As you see, we hit our first target. I moved my stop loss to break even, and then that was hit. So essentially, instead of playing in these top two ranges that we wanted to play in today, we played in the bottom two ranges. Taking into account that, I also wanted to fade these lows down here that we made pre-market, because these were the true pre-market lows. As you can see here, we actually did get a sell signal on this signal generator right here for our indicator, but I didn't want to sell support. You always buy support, but I had just tried that, and I know that there's a magnet down here on these lows. So I ignored that signal, and I set resting orders up here. You can actually check that out in our Discord. I can actually kind of post that here for us. So resting order, yeah, I actually put that in right there over in our Discord channel. So you can see this. So I'm just going to go ahead and paste it. Maybe. Paste. Yeah. So there you go. There you have it. We had resting orders down here. Markets were dropping down into the zone, and I bought it. So as you can see there, we had those resting orders well in place before they actually came down there, and markets rallied into target one, which would now be the middle of the bottom range. And we moved our stop loss to break even, and then we got scratched again. So we're 0 for 2, but we haven't lost. So technically we're 0 for 0. We just haven't made anything. And so I take this trade again because markets are this is a pretty solid low. When I zoomed out and I dragged my box across the screen, it's like, okay, this is a very good spot to be a buyer at, because we go all the way back to the 23rd, and just look at the yellow box. Bounce, 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 bounce. Fake breakdown. Bounce, bounce, bounce. Bounce, fake breakdown. So I really wanted to be a buyer at this level. So I actually bought again and I put my stop loss down on the pivot level below it. And on this guy, I was actually targeting the middle of the top range. But markets kind of slowed down onto this move here, as you can see. So we didn't continue to rally, though I just took my profit there and ran with it. So that was kind of my thought process on how I really wanted to see the momentum continue to push, but volume kind of dissipated. You can kind of see the big spike in volume right there, and then markets held that volume nicely, and then it just dried up. So I went ahead and took my profits there, just expecting it to be a range bound, 3 different range bound plays, and that's exactly what it turned out to be. So that was a good market read, being flexible but sticking to my strategy. Let's go ahead and jump over to the NASDAQ. Oh boy. So, NASDAQ trades here. We had our 15-minute play that we had initially put on. Go ahead and hide our little levels indicator there. So, we broke down here. Markets rallied in my favor, and I moved my stop loss to break even just a little bit too soon, and boom, we got wicked out. So that was the first wick out of the day, followed by the two yeah, Australian dollar wick outs there. And then we just went ahead and hopped in on the sell signal down here. So we sold this breakdown. Zoom on out. Zoom on out. Hooray. So on this candle, I had drawn a box on this little guy here. And I said, hey, you know what? When we break these lows, I want to be a seller. So I was a seller. I sold my 2 here. And where did I buy these at? I went ahead and bought down here. So I was actually sold at 513, and I managed to close that trade at 418. And then markets continued to be weak. So I sold again here at 33. And when markets continued to drop, I went ahead and bought for 334. As you can see here, there isn't really much to this except for basic support and resistance structure from my trading. So this was just a fair market consolidation breakdown short. See, a lot of people are afraid to do those, but as soon as these lows are taken out, you can hop in that trade, and that's exactly what I did. As you can see here, the lows here were about 515. I'm in at 512. So as soon as that structure got broken and we already had these other lows from previous, I knew that the trade had a higher probability of going down than it did bouncing at that level, because we're going to have a lot of buyers looking to buy here. But markets kept on pushing lower. As you can tell here, markets pushed lower and then sort of formed an ascending wedge. Not really an ascending wedge. What do you call these? Bearish ascending wedges. Ascending wedge. Yeah. Bearish wedge, ascending wedge, whatever you want to call it. Then markets broke down again. So, just keep an eye out for these patterns and everything. And then here we took another short because markets broke down again out of this, and then we closed at 334. So we had a scratch on this one and then 2 winners. I did have a play set up on our NASDAQ here. I wanted to be a buyer of the breakout of this level, but I actually had so this is how I play this play. I put on my long trigger levels, and you'll see these are the orange lines. So when these trigger levels get hit, you're essentially waiting for a pullback. But as you can see, this tight consolidation, I wanted to be a at market buyer here. So I actually messed this order up. I had my order here, and I had about a 55, 60 point stop loss, and I was targeting this middle of this yellow box range here. It was a less than 2.0, but I don't really care about ratios. Some people die by the sword by ratios. I mean, if the setup's there, the setup's there. Who cares? If I hit create and I hit stop limit, that means it's going to hit that price, and then it's going to place the order where the initial box is at instead of being right stop market. As soon as it hits it. So markets actually hit this and then ran right through and never actually filled me on that one. But as we jump over to the S&P, we'll see that markets actually, I placed my stop loss, my stop market order correctly on this one. So here I was a seller. I sold my 3 here, and then I bought my 3 here. And then I was another seller at this level. I was expecting markets to continue to break down. I also took my sell signal here, as you can see, target 1, target 2, target 3, my green line and my red line. I had my stop loss here, and then I wanted to see this level break. As you can see, I was long at 98. I trimmed some at 607, and I closed the remainder at 611. I have this circled here for a good reason. I'm going to get to that in a moment. I'm going to have to zoom out to a 5-minute candle. But here we had my trigger. My long trigger says, hey, at this level, we're going to jump in this long trade. But as you can see here, this is a 3.75 range. Usually when this gets triggered, I put my order 2 points in front of the zone. So I just said, whatever, I'm going to at market at 3.7. I'm going to risk an extra 1.25 points to make sure I get in this trade. And it actually played out for me nicely. So we did actually manage to run into our first resistance level up here. That's where I trimmed my first profit. And as we failed to actually break through, I just went ahead and closed the remainder at it. And between this trade and the NASDAQ trades that were successful, and that Australian dollar trade, that's what actually brought me into profit, because I had 2 losing trades, I believe, on the NASDAQ, and I had a losing trade on this guy here. So, all in all, I was ebbing and flowing. I saw my signals, I took my signals. I didn't hold my signals as long as I usually do, and that kind of hurt me at the long run. So my signal over here on the NASDAQ actually should have kept me out of every single other trade of the day, if I'm being honest with you. But I completely screwed the pooch on that one. So jumping back over to the NASDAQ here, if we jump out to my 15-minute, and I put my 15-minute breakout lines on, what we should have done, which our automation got done correctly, is sold at our signal, not moved our stop loss to break even until we get our first 75-point shave. Instead, as soon as the market started to move against me, I moved my stop loss to break even, and that's what actually screwed me. Because this would have actually been an amazing runner. I would have shaved a little bit here. I would have shaved some at 150, and I would have actually closed the day on this position alone up $680. So unfortunate, I didn't ebb and flow with that one correctly, but I didn't get stuck with the notion of, hey, I need that. I just brush it off, ebb and flowing in and out with the markets, and it is what it is. Lesson learned, I put it in my journal. But as we look over here, I wanted to just take a moment to look at just strictly price action. So this would be a tradable reversal. So it looks like Nvidia missed the scoop. Oh boy. Oh boy. How low's that gonna go? Anyway, sorry about that. So this is usually a reversal, but I want to see it down here. So see, I put these arrows here. So you had nice selling volume with no buyers on this candle. And then you had a reversal doji here with about equal sellers and equal buyers. But our signal candle, although a bullish reversal pattern, had no buying volume. So I actually skipped this, and it was under a major support and resistance zone for intraday trading. So I'm looking at that thinking, okay, well, if I take my little tool here and I say, hey, I'm going to buy a breakout of this, my stop loss has to be below that wick, which is a 7.5-point stop. And the probability of coming up to this morning's highs before we had that breakdown of 18 points is very, very low. Now, why do I say it's very, very low? It's like, okay, so we broke down this market structure up here. Overnight lows, forget about them. Opening market lows, forget about them. They're gone. So we had this little consolidation patch here, as you can see, if my mouse will work, that we also broke down from. So it's like, okay, a lot is going against us. And then obviously we have this whole entire resistance zone. So the best I could have done would have been I'm risking 7 to make 7. Not a good trade at all. So I'm going to actually show you where the trade was that I should have taken that I didn't, and I'm going to tell you why. So actually the trade should have been down here. Now we have our sell volume candle right here. Right? Nice big. Then we have our consolidation doji, which usually gives you the reversal sign. And then we have our bullish reversal pattern, right? But as you can see, no buyers on the selling pressure, about equal buying and selling on the doji. And then we had almost no sellers on this bullish reversal pattern here. But I didn't like that the volume was so low. So I didn't take that trade. But let's just say the volume was high and it fit my parameters to take that trade. This trade would have been a good trade. It would have been a worked out trade, and it would have been a 2-to-1. I would have been risking 11 points to make 22, and that would have been completely plausible, and it would have been taken care of easily. But I tell you, I stay out of that trade only because this candle did not have enough volume on it. If it had a little bit more volume, it would have been groovy. I would have been in it. But all in all, today was a profitable day. Wasn't an amazingly profitable day, but nonetheless, it was a profitable day. So tomorrow, when I do my daily recap, hopefully I come bearing better profits. But we have been avoiding losing days. So I'll take a very small winning day and avoid the losing days if possible. There's nothing wrong with that. Be humble, trade smart, and we'll see you tomorrow.